My name is Corey. I appreciate you guys taking time out of your day to tune in or listen, however you are. Really appreciate it. A little bit about myself. I am a loan officer here for the accredited group. I've been working for this firm for a little bit over 3 years. Not only do I work in the mortgage department, but I also specialize in unsecured financing for business owners here. So another thing, I get business owners working capital to help them scale their business and obviously take their business to new heights. Okay, what we're going to hone in on today in particular is our non-QM mortgages. So I have beside me the head of the mortgage department, Manny DeMonte. Manny,
hello, everybody.
Tell yourself a little bit about you here.
Thank you, Corey. Thanks for having me on. Hello, everybody. My name is Manny DeMonte. I have been in the mortgage industry for roughly 22, 23 years. I have been associated with the accredited group for a little over 10 years, actually 2013. I help them do the non-QM mortgages. We do everything non-QM mortgages, both conventional, traditional, and the non-QM, which is our most popular product right now. So Corey asked me to jump on and discuss our most popular product and how we're helping people get homes.
Absolutely. So the most popular product that we have to offer right now is what I mentioned, the non-QM mortgages. So Manny, I just want you to give a little insight. What is really the main difference between a non-QM mortgage and a conventional loan?
Oh, the biggest difference, I would say, is how you prove income. You know, we do not need tax returns or W-2s, do not need any of the traditional income ways to prove income. How I prove income is or how we prove income to the underwriters is one of a couple ways. I could either use a business person's bank statements, I can use a profit and loss, or I could use the income of the property itself, the market rent, and almost virtually go no documentation of traditional income at all. So that is the main difference between a conventional and a non-QM.
Yeah, and that covers all landscapes there. You want your primary residence, your investment property, we definitely can get that done as well. So another thing that I wanted to hit on, what is the particular borrower that you're kind of looking at that would qualify for these types of mortgages?
Well, the particular borrower that we like for the non-QM and the particular borrower that has an appetite for the non-QM is the same people that the accredited group gives those performance loans to. You know, because a lot of the loan is based on your bank statements. Again, that's the most popular form of proving income is the average of the 12 months of bank statements. So I would say, you know, a borrower that needs to use their adjusted gross income, you know, that is unbankable, as they say, like our performance loans, but it's bankable on the non-QM side, which leads me to say, you know, we are the bank guys. When it comes to these non-QMs, you know, go accredited, you know, our banking side is Merchants Property Solutions. We are the bank. It doesn't leave house. The underwriter is, you know, what works for us. So it's our underwriting, you know, our processing. It doesn't leave house. We're not a broker when it comes to mortgages. We are a banker.
And that is very important to mention. We are the direct lenders, so we definitely, you know what you're getting with us. Your file's not being shopped around to different people here. You know what you're getting. We're straight shooters, and we will do everything that we can to obviously help you out with that. Another thing I wanted to hone in on was the documentation that's required for these types of loans. We know bank statements is one route, but what's kind of the documentation that we would need here, opposed to a conventional loan, let's say?
Well, documentation is extremely traditional. The entire loan process is extremely traditional. Mm-hmm. You know, it mimics any mortgage process where we need the appraisal, we'll need a title report, you know, we will need other documents, you know, proof of down payment, bank statements, but the one thing we don't need, and I cannot stress this enough, I do not need tax returns. Okay?
Which is the biggest thing.
No tax returns, no W-2s. Again, you know, those individuals, those business owners that need to use their gross income, because the adjusted gross income just takes too many deductions.
Yeah.
You know, we're able to use the gross income with a non-QM mortgage.
Just like the performance loans as well. Obviously, tax returns might not be the strongest on these business owners, but there's still ability to get these things done. Okay, so Manny, another thing I wanted to hit on as well is the underwriting process. Is there any differences from a conventional loan here with underwriting? Just give me a little bit of a synopsis on how that works with the underwriting.
No, there is no difference in underwriting. It's still underwriting to particular guidelines for that program. You know, the guidelines are different, but, you know, a qualified underwriter still looks at the loan. They assess the risk of the loan, and they assess the other documents that we would need. So just to give you an idea, the first round we submit everything we think we need. Underwriter comes back, great news, Corey. Here's your commitment letter. You're conditionally approved.
Yes.
So conditionally approved means, okay, we're going to give Corey the $300,000 he's asking for. He just needs to give us these conditions, and again, it's very traditional. There's always letters of explanation if there's any lates or derogatories. There's letter of explanations for large deposits. Letters of explanation for old addresses, and then the bank statements will have a couple more conditions. So most of the time, for all the loan officers and all the affiliates that have seen something from on the conventional side before, have never seen a non-QM. The process is exactly the same. The STIPs are usually, or conditions, I'm sorry, STIPs is an industry term. The conditions are virtually the same.
Yeah.
Again, the one thing you're not going to see on that conditions list, you'll never see them tasked for tax returns.
Never
again,
once.
Never once.
Never once.
Never
and
once.
that's the
They
main
don't
thing.
even
No
want
tax returns. We don't
filed.
need any type of tax returns to get these transactions done, which is very big. A lot of people don't understand that this program is even available to them when they're running a business and showing weak income on the tax returns, or lower income, as I should say. We can get you in a home just based off the tax returns. Or again, the rental income, as Manny mentioned prior.
Yeah, the DSCR loans, so popular right now.
So
Getting
popular.
crazy.
You know what, just go a little bit into the DSCR loans, because that is a main focal point as well that we've been getting into.
Great, and they're so popular.
Yeah.
With a lot of investors out there, a lot of them want to get into it, whether it's a fix and flip, which falls in the same category as the DSCR loan. I like to call them little cousins of the non-QM world, because it's still a non-qualified mortgage, because you're not proving more income the traditional way. So the DSCR loans.
Yeah.
That is a loan where we use the income of the property as opposed to the income of the individual. So when I order the appraisal, we ask for two things on that appraisal, two numbers. Number one is the value, the market value of the
market
property.
value of the property.
Correct.
Yep.
Then the second number we ask the appraiser to assess is the market rent. So I'll get an appraisal back, and it'll say, okay, 123 Main Street in Islip, New York. This property is worth $300, as my opinion, and your market rent, what we feel you can rent it for, is $2,500. Now, what I do on the DSCR, it's called debt service coverage ratio, which means as long as the debt is serviced by the income, meaning if my mortgage payment is $2,000 and my rent is at least $2,000 in this case, and again, I'm really simplifying it, team. If you have any questions, dial in. If you have any other expenses, they get it in. But again, just for simplicity, we take those two numbers, and as long as it's covered, we're good to go. There's no income documentation.
Very well said. Another thing I want to add on the DSCR loans, which is probably the most potent and the biggest thing that we've been closing recently, I would say. There's nothing that we require. So when we mention the bank statements, we don't need bank statements whatsoever. So if you have a borrower here or a merchant borrower, any way you want to phrase that, who's depositing even $5,000 a month into a business bank account, we can still secure them that loan. We
Correct.
simply base it off of the projected rent roll.
Correct.
It doesn't matter about income. The only thing that happens here is we need the down payment funds. Okay?
Correct.
The down payment funds is
Correct.
key. That's the only thing holding you back really from attaining these loans.
Correct. Now, talking about down payments, what typical down payment on a primary with these?
Yeah, so on a primary residence here for us with these bank statement non-QM loans, it could range, the minimum is 10% here, okay? It's a case-by-case scenario, obviously. If credit is a little bit on the lower end, it might require more down payment, okay? Meaning it could get up to 15%. If credit's extremely low here, we're always able to work it out, but it just might require a little bit more down.
With the floor is roughly 620, team.
Yeah.
We're looking for 620s case by case. We'd like a 660, opens you up to all products.
Exactly. 660 is a little bit of a
620
magic number at this
Exactly.
point
Yeah,
here.
660 is the magic number. 620 could still get you in. And again, keep in mind, guys, we do everything on mortgages. We're keeping these guidelines geared towards the non-QM mortgages. So guidelines are a little bit tighter. Why are they tighter, Corey? Because we're not proving income the traditional way. So there needs to be other checks and balances. One of those checks and balances, hey, you're proving income not not the traditional way. So we're going to make the credit scores higher. We're going to make the down payments higher. Stuff like that keeps us out of the 2008 mess. Because as you know, we're all on the verge of possible recession.
Yeah,
And the
absolutely.
one thing I could see happening with these deals is the guidelines getting a little bit tighter.
Yeah.
Credit
Just like
scores
anything
being
else
raised.
as well. Sorry
Yeah.
to interrupt you here.
Yeah.
Just like anything else as well. You go to your local bank, you want a loan. Guidelines are tightening up in any industry here, not just mortgages. Things are getting tough, as
Correct.
everybody's aware of. In
Correct.
our own backyard in New York here, we're dealing with some banks going under. And
Signature, that's right. I forgot Signature Bank went under, right? Right
Exactly.
here down the block.
Yeah,
They
so-
went under. Who would have thought?
a lot of different things happen in the market. So, biggest takeaway from the DSCR program is it doesn't even take any type of income to get you in a home. To kind of move on from that, I do want to let you guys know any questions that you might have. If we're going a little fast here for you, if you don't understand a product in particular, anything that we said, feel free to leave a comment. At the end of this, we'll go through everything here, and we'll make sure we answer every question that you have or go through any comments that you might have. Okay, another thing I want to segue off into is how do you project the future and the outlook of this non-QM mortgage? Just with obviously a pretty volatile market, how do you expect this to kind of go along?
I expect a few programs to disappear, okay, and I expect the guidelines to get very strict. I don't think they're going to disappear completely. I don't think it's going to be as bad as '08 as far as, big mortgage banks closing down. For example, bigger mortgage banks, you had your Countrywides, which is the biggest lender at the time.
Yeah.
Your Washington Mutuals, they got absorbed by Chase. I mean, you might be a little bit too young to remember, but, Bank of America was absorbed. And the biggest lenders stopped lending for a little while. I mean, I had people at the closing table that were saying, "Hey, your bank just closed. We can't give it to you."
Yeah, that's it.
You laugh about it now, but I don't foresee that happening because now we get a lot of forewarning if they're changing programs. I know there are a couple of banks that went up, and maybe the government messed up. We could talk about that whole other segment, but I don't foresee people being at the closing table and it being as bad as '08. I do foresee some programs going bye-bye.
Yeah.
Definitely, that's a fact. If you think banks are going to come out scathed, or you think programs are going to change a little bit, folks, and you could wait it out for the rates to go down, or I wouldn't do that. If you're looking to buy a house, get pre-approved. That's the most important part.
Yeah, and another thing is with pre-approval letters now, it's absolutely crucial. With the way the market is, good luck even getting into an open house without a pre-approval letter. So when we're talking to our clients here, our merchants, we want to stress the fact of getting stuff in fast here. If you want a home, you need to be pre-approved. There's a good chance you're not even going to be able to get into that open house without the pre-approval letter, which is why we work very diligently and act fast, where you can have a pre-approval letter sent out to you within 24 hours of submitting
like your
documents.
pizza guy. Remember your pizza guy?
Yeah, okay, so to segue into that, now we're bringing
your
that
pizza
up.
guy. I
Okay.
remember when we gave him a pre-approval. We went there and gave it to the pizza store.
So long story short here, guys, one of my best friends that I grew up with owns a pizzeria. Okay, he just started that business about 3 years ago. Wasn't doing great deposits to start off, simple, small business. He's depositing about $20,000 to $30,000 a month just in gross revenue. I was able to get him in a home. Obviously, no tax returns required because they were a little bit banged up.
I didn't even think he did them. He was a little behind on his taxes too, right?
No, he wrote off everything. The tax return showed no income. He actually showed a loss.
Okay.
Okay.
That's
and
right. That's right. I'm sorry. So many loans, guys.
so
So
he-
many loans.
So he got married about 6 months prior. He was losing his mind. He had a baby a year prior to that as well. And we were able to get him in his dream home in just 45 days from submitting the documentation, when he never thought that would be an avenue that he could really go down.
He almost cried.
Yeah,
I remember. He almost cried.
Really
As
almost
he's making
cried.
our free pizza. He
Yeah,
almost
so
cried.
pizza's on him. I don't need any more pizza. I definitely got that covered for now. But if I shed a couple pounds, I'll be taking him up on that offer as well. So, I mean, another thing as well, guys, and again, I just want to reiterate, any questions, please leave that along in there. We'll answer all that at the end of this. But what type of advice would you have for these affiliates here, just in a sense of product knowledge, what they can do to maybe gain more access to how these loans particularly work? Well, what advice would you have for them?
What advice would I have?
Yeah.
Gun to my head. Well, get educated. I have a segment every Monday, Mortgage Mondays with Manny.
It's great.
What
Absolutely
we do
great.
is I get more micro, let's say, more granular. Go over one segment, one part of the mortgage. For example, I go over an appraisal or I'll go over just the bank statements, what we look for on a bank statement deal to help the affiliates with our products, because I'm a very big, in my 23 years in sales, I don't care what you do, life is always a sale, everything's a sale. So in my 23 years of my income depending on my sales skills, I always felt confidence, telling the truth, being yourself, coming through with what you say, and being confident. And to me, the best way to be confident is education. So educate yourselves. One of the best ways to educate yourself is we have a lot of stuff on our website. We have, a few segments on YouTube that we have, and you have the best education of all. Corey and myself. You guys can reach out to us, anytime you see fit. You can reach out, and we will answer whatever questions. Don't be shy, guys. I mean,
and
Corey
also,
fields a couple hundred phone calls a day.
he's a nice guy. I'll break it down to you very simple as well, too. Anytime you guys have any question, you want to run a scenario by us, you want to go into anything, any bit of the programs that we do offer, we're not just your local bank that's closing down at 5 o'clock and you won't have access to speak to us. After hours, anytime, feel free to reach out to Manny or myself, and we will accommodate you and answer any questions that you have. You're not dealing with somebody that's going to...
I think we have some in the Q&A right now.
Some questions in there?
Yeah, what do I say?
Always feel free. Our contact information will be listed. Feel free to always reach out. I'll answer anything you guys might have.
Sorry, guys, I'm looking at the screen. What is your minimum credit score? Our minimum credit score, again, depends on the product. If you're going FHA, 580. If for the product we're talking about tonight, we love a 660 because that opens up to all of our programs in the non-QM world.
Yep.
Can I get away with a 620? Yes. That just means if it's a refinance, you need to leave more equity in the house. If it's a purchase, you need to put more money down. So, or guys, if the credit's a little bit low, we do have a credit repair / coaching service. Sometimes it's a matter of getting up. How many people have we just paid off a couple credit cards for?
Yeah,
and it was only maybe $1,000 that they were over that limit to get them from a 600 to literally a 640.
Exactly. I'm very happy you brought that up too, because that's a very big component in any of this. Most borrowers, you're self-employed, it's tough running a business and maintaining a good credit score. A lot of the people that we'll talk to have mid 600s, low 600s, maybe from some high utilization on some cards, but we actually help with that in-house here, where we're able to build your credit score up to get you in the home. It's not just mortgages and we send you out the door. We provide plenty of different programs here to get you bankable enough to secure that mortgage. If you're not qualified right now, that doesn't mean that we can't take it to the next level to get you qualified for a mortgage in the near future.
Correct. It's not a goodbye. It's just, I'll see you later.
Yeah. And a lot of people will do that. We have plenty of resources here where we can make you and build you up to the point where you're able to purchase that home.
Correct. What else do we have? What is the minimum DTI or maximum DTI? So maximum DTI, guys, like every other, like I said, a lot of these things mimic FHA conventional guidelines. It still is, a lot of the guidelines are still traditional. Again, the only thing untraditional is how we prove income. So no matter how I derive your income, with the exception of DSCR, that's a different type of ratio. Whether it's a profit and loss, a bank statement, whatever the case may be, asset utilization, it's still 50 debt to income ratio. So what that means is all of your bills combined in conjunction with the mortgage payment cannot be more than 55%.
Exactly.
I'm sorry, 50%. I'm correct, guys. There's
50%.
FHA goes up to 55.
Exactly. We're able to use 50% of the gross deposits that people are depositing into their business bank account.
Correct.
Again, as well, when it comes to the DSCR loans, which we brought up before, that still is not the case. We just simply base it off of the projected rent roll on that.
Yes. So, next question. What states can you do this in? So when it comes to primary residence, the second homes, guys, we are licensed as a bank in 38 states. All the big states we're licensed in, with the exception of New York. That's coming next. Fingers crossed, hopefully by the end of April. It's been a long road on that one, but we've been fighting the good fight, and we should hopefully be there soon. So Roll the Ricketts, if you're listening, please approve us soon. But again, in all seriousness, 38 states when it comes to primary homes and second homes. When it comes to the DSCR loans, we are good in all 50 states and the District of Columbia.
Yeah, I'm happy you brought that up too. Yeah. So when we're segmented off a little bit with the 39 states, that's only for primary residences. Investment properties, we can do all 50 states without a problem.
Correct.
Okay, so just wanted to make sure that you guys were aware of that. there's no restrictions when it comes to that.
Correct.
We have any more questions here?
Yeah, well, again, what is the minimum down payment on a purchase? Again, minimum down payment team, we could do 10% on a purchase. Credit score probably needs to be a 680. Okay?
Yeah. I mean, if you're looking to refinance, if credit score comes back a little bit lower, we just have to obviously lower the LTV of
Correct.
that.
You have
it
to
all
leave more
depends.
equity in the home.
It has to be more equity. So another
All right,
thing
guys.
to kind of keep your eye on.
Well, we'll give you a few more minutes to get those questions in, team. Those are good, intelligent questions, though.
Yeah.
That you
Ask
guys are
anything
asking.
you want.
You're paying attention. Let's just see. So right now, Corey, again, we help the pizza guy team just
Pizza guy, one
to
example.
end. Love the pizza guy. You want any words to wrap up? Words of wisdom?
Well, I mean, a couple of things I maybe just want to say here is I'll reiterate. I know I kind of hit on it before, but when you're dealing with us here, I guarantee you're going to be getting people that are going to bust their butt for the clients as well as yourself here to get files closed. That's the main thing. At the end of the day, we work around the clock. I mentioned it before. Never, never, never feel shy or anything to reach out if you just want to ask simple questions. That's perfectly fine. That's my job. That's what me and Manny are here for. You know what I mean?
Yes.
So
that's what we're here for.
Yeah, that's what we're here for. So never think a question could be a bad question. If you're confused about anything, about any of these programs, which we will be getting into more programs down the line here. We're just kind of honing in right now on this non-QM program. But if you have any questions, always feel free to reach out to me. My contact information will be listed at the end of this. And you can give me a call or a text anytime. We'll go through every scenario you have.
Thank you, team. So, I mean, there's no more questions. It's been great talking to you all. Corey, thank you for having me.
Yeah, no, absolutely. It was a pleasure. I would like to say thank you guys so much for taking time out of your night to tune in here. Nothing but a pleasure. I look forward to the next time I'm able to reconvene and talk to you guys. And I can promise you we will have some more stuff to roll out for you then.
Thank you,
Thank you so much. Have a great night.
Thanks,
Appreciate
guys.
it.
Thanks for having me, Corey.
Yep. I know. It's okay.